Will commercial real estate undergo a great reckoning? We're speaking with Michael Simpson of the National Commercial Real Estate Association to find out. I'm David Grana, and this is Real Talk. Michael Simpson, thank you so much for joining us today. Really appreciate it.
Well, thank you very much, David. Great to be here.
Now, Michael, got to say, I took a 3-day course that you delivered through EXP Commercial. Was really excited about it. Walked away very enthusiastic. Before we get into the teaching materials that you've got as part of your your career now as an instructor for commercial real estate brokers, what was your path in the commercial real estate world? How did you end up here?
I had a fun ride. That was a long time ago, about 30 years ago, I suppose now. And I've got a couple books that are out there. And in the books, you can go a little deeper into really my story and how I had a job at aerospace and part-time and was laid off and had a couple deals that I got. And so I ended up quitting when they laid me off. And then the two deals fell out, and I was freaked, panicked because I don't have any money and didn't come from a background of money at the time. And so you could go learn about all that, but it's been a fun ride. I started in residential real estate and really struggled in the beginning. In fact, it took me about 12 months before I started to see success, and I was going to quit on the 11th month, and my broker talked me into staying. And so then I took off. Then all of a sudden I was in overnight success in residential real estate, as they say. And what happened was I got a deal. Somebody gave me a deal in residential real estate, like so many people. They have a referral, and a past client or somebody comes to them and says, "Hey, can you help me out with this commercial transaction? You do residential, I know, but can you help me with this? Because we know you and we trust you." And that's usually where this whole thing starts for so many people. And that's what happened with me. And so, of course, I said, well, sure, yeah, I could do that. It was 6 units at the time. And I had no idea how to do it, but I said, sure, I could do it. And so I kind of struggled my way through it and fumbled my way through it. And I started asking commercial agents for help, and they didn't really want to help me. And they didn't really, which I understand now today, because they didn't have really the time to really teach me at the level that I needed to learn. But I was able to get that deal closed and was like, wow, how fun is that? So what a great transaction that was, versus these residential buyers that are so emotional and sellers that are so emotional and everything about residential real estate. I was just realizing that I was just tired of it. It was, the evenings and the weekends and the driving people around in your cars and just all the emotional side of the transaction. It's just really not who I am. And the commercial stuff was much more logical. It was numbers. So I really enjoyed it. And I got a flyer in one of my mailboxes at the time for a commercial class. And so I thought, wow, this is a sign, and so I took the class, and I still believe it was a sign today. And I took the class and just loved it. I couldn't wait. It was 3 hours long, twice a week for 6 months. It was really intense, and I couldn't wait for the next class. It was all I could think about. And the instructor, I think, picked up on this and saw that I was so passionate. And so he called me at the end of the class and said, if you come over to my office and help me build a commercial division, I'll mentor you. And so I went over there and started helping him build the commercial division while I was doing my residential deals. Now, I was doing about 100 deals a year at the time too, so I was really busy. And I time blocked for commercial real estate 2 hours a day to get my commercial real estate going. And with his help, I was able to get off the ground and get things rolling.
And you've done, I assume that you probably look at the challenges that you went through starting up your commercial career, and you established the NCREA. And I assume that was probably the motivation behind that, was so that other agents that were trying to break into commercial wouldn't have to go through those same challenges without having some sort of guiding light, if you will.
Yeah, no, not really. So when I started doing deals and sales and residential and commercial, and I thought, I want to go full-time commercial real estate, and but I was doing 100 deals a year in residential, so I didn't want to give that up. And my nephew is on my team now today, still, Stephen Moraldo, and he was going to come on and take over my residential division. But then all of a sudden I was introduced to a franchise and an opportunity to own one in Long Beach, California, here where we are. And I looked at that franchise and, really fell in love with that franchise and thought, wow, what a great model. And so I opened up the franchise. And the franchise is a training franchise where you do lots of training. And so I just started teaching and training my commercial stuff and spreadsheets. No structure whatsoever. And people started showing up. The classes were growing and growing and growing. And somebody said, hey, will you come to my office from an outside office? And I said, well, I guess so. I never really thought about it. So I started driving around to these offices just by request and really for free and wasn't charging anything. And I was like, I can't keep doing this, for one. And two, I realized there's a huge demand for learning about commercial real estate and investment property and how to do it. And so I launched the NCREA, and that's really how it was born, was just out of, yeah, I don't know if you call it fate or luck or what you want to call it, but that's how it happened.
So right place at the right time. And what are some of the skills that you can learn? And by the way, I took a 3-day course. I can recommend anyone should take it. It was amazing. But what skills are you teaching new incoming commercial agents?
Yeah, well, and that really is our niche. Our niche is I'm the resumercial guy. That's who I am. I don't think there's anybody out there who has got the background that I have in residential real estate. You have people who have a lot of experience and background and skills in residential, and you have people who have a lot of skills and background experience in commercial, and far more than I do, and certainly a ton of cases in each one of those cases. But I don't think there's anybody out there who's got more experience in this residential. And this is really my niche. My niche is that it's showing the residential agent or the junior, what we call a junior commercial agent, how to get started and the basic fundamentals of getting started in commercial real estate, because it's different, right? You're using the income approach, number one, versus the comparable approach. So you're looking at the deal differently, completely differently. And it could be a cost approach or owner user. I mean, there's all kinds of ways to do it in commercial real estate, but we're helping the residential agent learn how you do that and how you structure a schedule to do it, especially if you're trying to do both residential and commercial. And then the various tools that you need to, like in residential, what do you mean tool, Michael? Like in residential, a tool would be the MLS, right? Well, in commercial, we're not going to use an MLS necessarily. And so there's different tools for pretty much everything. And so I teach that. I share with them that what those tools are and how you get them and use them.
Now, I want to shift a little bit into something you'd mentioned during the training, and it stuck with me. You kept mentioning the Great Reckoning that we could potentially see in the...
Before you do that, before we go there real quick, David, I just want to mention to people, because there are a lot of people who don't like residential real estate, right? Mm-hmm. And they frown on it, specifically your full-time commercial firms and agents, and a lot of them just say, we don't like that. And so let me kind of be clear on why, first of all, if a residential agent really wants to do commercial real estate or wants to do a deal for you, if you bring me a deal and it's a lead and I know you and you're a friend or a past client, I'm going to say yes to the lead, right? And so what we teach and train is how to take your lead and not mess it up, right? Not mess it up, not cause a huge issue. And at some point, either I'm going to be able to do it on my own, whether I'm getting trained from Michael Simpson or one of his classes, or a David, or I have a senior or a mentor, a commercial guy or gal in my market that I'm working with. At some point, I'm going to hit a ceiling where I'm like, okay, I don't know what to do. I should not keep moving forward and try to figure it out and learn on your behalf, right? And so this is what people don't like is, well, these residential agents are out there messing up the commercial transactions, messing up my brand at my company because they're doing it wrong. I agree with that. Don't do that. Don't mess up the brand. Don't mess up of any company, and don't, cause an issue for a client. Make sure you know what you're doing, let's get you trained. And that's what I'm all about, is training. And by the way, that goes for a residential agent that's doing residential deals. You should be trained. You should know what you're doing. Don't go out there and cause problems for people. So I just want to mention that and throw that out and be very clear that I'm a fan of residential real estate, but I'm a fan of doing it right.
Yeah, and just to stay on that point for a second, it's been a dirty word to some pure commercial agents out there, commercial brokers. They don't like the word residential, but to your point, as long as you've got the training and you know what you're doing, then it's okay to proceed in that manner.
Yeah, exactly. That's exactly what I'm saying, and that goes for, like I said, residential or commercial or anything, because we know that there's deals that can get complicated. And I would just end with the common thing or theme that I see a lot is commercial agents saying, "Oh no, don't do that. Those residential agents shouldn't be doing that." Well, what happens to a kid when you tell a little kid, "Don't touch the hot stove"? The kid goes and touches the hot stove. It's the first thing. You're telling them to do something, and they're going to probably do the exact opposite. So the messages should probably be more along the lines of, "Hey, let's make sure you're getting proper training, and we can help facilitate that." Whether it's me or these commercial agents that are saying just that, that might be a better approach.
And let's get into the nitty gritty of this one. This is an interesting topic. Yeah. I just love the name alone, the Great Reckoning. We're going through some really let's call them turbulent times economically. We've had Jay Powell from the Federal Reserve testifying for the last couple of days, talking about some of the concerns around the economy and inflation and all this. You mentioned the Great Reckoning during this training this 3-day training that I did with you. What is the Great Reckoning, and why should we pay attention to it?
Well, there's a lot of moving parts here with this, and COVID is the culprit basically, and so if you just look at what happened with COVID, first of all, you have people being sheltered in place, businesses closing, and this mass exodus from the big city populations out into more rural areas. We're all learning we can do this way, right? We're all getting more comfortable this way, and that's going to stick around probably for a while. I think we all agree that, yeah, I certainly do miss getting together and cocktails and food and hugs and handshakes and all of that. But I'm standing here in my shorts, right? And to prepare for this meeting, it took me 5 minutes. Where before, I'm on the road, I'm driving, so there's no expenses from a company perspective that does a lot of training and does a lot of travel. So I believe that a lot of companies are learning that they are not necessarily going to have office space for all their employees. The employees are more productive in some cases. The employees are happier and not having to commute, and they're liking the fact that they don't have to drive to the office every day. And so what does that mean? What is that causing? What does that mean with all the vacancies and empty offices? What's going to happen there? What are they going to do? And look at the economy, the market, the real estate market and residential real estate across the board is just on fire. I mean, my goodness, as we stand here talking today, it's just been incredible, and it continues to be. But why? Because when COVID hit, everyone probably, I know I did, thought, okay, there goes the market, just period. But it just kept moving right along, and we had all the PPP money that was injected into the economy. You had trillions of dollars injected into the economy, and massive unemployment. What do you want to call them? Benefits, additional benefits, that people are making more money to stay at home and not work than they were to go back to work. And so at some point, all of that has to start to show up, right? It means to me that you can't keep just printing money and then think that it's never going to have an impact later. And so I just think that at some point, if things look kind of good right now, again, as we stand here today, things look pretty stable and strong, but we know certain sectors, multifamily, office, certain parts of retail are getting crushed. And so we also know there's the forbearance. There's that whole forbearance conversation that a lot of owners, um, participated in. That's coming to a head as we come out of February here, meaning they're going to have to deal with that. And whether lenders put it on the back end of their mortgages or whether they call balloon payments. The reality is, what happens if I do forbearance and then all of a sudden I come out of forbearance and I realize, okay, maybe the lender will put it on the back end. That's great. So I don't have to worry about this balloon payment. But if they do hit me with a balloon payment, I've got a huge problem because I'm not going to be able to pay it. And now my unemployment benefits have run out. And now it's time for me to go back to work. And maybe my job's gone now, right? Because of everything that's happened. Well, what's going to happen here is I'm going to need to liquidate my property. And I may have equity, which is one of the big differences between now and 2008-ish, is that there was just no equity during that time. And so that's why we saw a lot of short sales and REOs and foreclosures. I don't think that's going to happen on the residential side. But I do think that those scenarios, like I just said, are going to show up big time in a lot of cases, and people are going to have to sell. So that's a big opportunity for people, real estate agents out there, because it's could create inventory, right? Sure, it could create inventory. So you have an opportunity there if you're on top of this in a lot of cases. But what's driving the market right now? Well, it's no inventory. So what happens when all of a sudden we start getting more and more and more and more and more inventory? Remember, folks, it doesn't take much. I can tell you, I was talking with one of my buddies last Saturday, as a matter of fact, that has been through multiple markets like I have. He's been around about 30 years here in Long Beach. And I remember talking with him and I said, I remember the inventory was something that I tracked every single day. To this day, I'm very good at absorption rates. So absorption rates, how much is for sale and what of any product type in any area. And of that, how much is selling every month, right? And if you track this in time, you'll see trends. You'll see it start to change, right? And so I was doing this, and I just remember that each one of these market shifts, whether it was 90s or 2008 or whatever, I remember saying, "Gosh, there's no inventory. And then all of a sudden, wham! Well, where did all that inventory come from? Holy cow! When did this happen?" And I'm tracking it. And then all of a sudden you start to hear about it on the media, right? And the industry starts catching wind. And that's how shifts happen, whether it's up or whether it's down. That's exactly how it happens. And so we're in this super, super hot market right now, pretty much. And it can't keep going this way. It's been going like this and this and this and this and this and this and this for how long? And it's statistically, historically, can't keep happening right this way. And so at some point, all of this could come, hit us all in the head basically at the same time. And we certainly know hospitality, like I said, office, retail, you can see it. You can drive around like you and I were just talking about, Dave. We can see those properties right now. And so what happens when all of that catches up with us? What do things look like?
I'm curious about something because I do drive around and I do see the signs, free rents, for lease, etc. Whether it's office, whether it's retail, I'm even seeing it in some industrial properties. Is it possible that some of the landlords out there are just not budging on and lowering the price of the property to a true valuation for some reason, because of maybe PPP money, because of stimulus, or just because they're just waiting for the market to supposedly come back magically?
Sure. Well, of course. Yeah, that's exactly what's happening, is that, you have a lot of owners who are wealthy and they don't need to. I mean, this question comes up all the time. I'm not like all the time. Hey, Michael, the property is leased for 50% of what it normally is. How do I value the property? And the answer is you value the property at half because it's half the income. Unless you can show, like if I'm gonna buy something, I'm buying it, I put up my money and I expect a certain return, right? And so, wait a minute, are you saying I'm not going to get my return that I'm going to get that I expect, and that my return is, needs to, in order for my return to be what it is, then I need to pay half the price? That's where the value is, because I'm not going to buy it and take a loss on the property. Who's going to do that, right? And so no one really wants to hear that answer, but that devalues the property in that scenario literally in half. And so if you're an owner and you're hearing this, or you're thinking this is my only option is to keep it or do that, or to repurpose it and start using it for something else, which is really where things are going right now at a massive level. And we can talk about that later, but if those are my options, I'm probably going to say, I'm just going to keep it. It doesn't make sense for me to take a beating like that. And they, whether that's a smart move or not, I mean, time will tell, right?
So it's all just going to depend on whether or not an owner can withstand the carry costs of holding on to the property or not.
Yeah, I think in most cases, that's what you're seeing. Or if they can scramble and try to repurpose it, that's what a lot of owners are trying to do.
Now we have a lot of discussion in the news, in the media, about inflation. That's the big bad word right now. Treasury rates last night got to about 1.42 for the 10-year. They since have dropped down, I think, around 1.37, 1.38, but still that's relatively high. I mean, it's a 25% leap in a month's time. I know that property has traditionally been a great inflation hedge. However, if you have to finance a property finance a loan to be able to get a property, then that creates a little bit of a challenge. Are we possibly getting into a cash only type of market, or what kind of impact will inflation possibly have with property transactions in the commercial space?
Well, we're there. We're in a lot of properties you can't get financing at all. Period. Right now. Hospitality being one of them. Retail is really difficult to just get financing at all. I've had some lenders say, we need 12 months debt service payments in your bank in order to give you a loan. 12 months debt service payments in your bank. And so financing is so seller carry and seller financing and things like that. Creative ways of doing it are back. But yeah, inflation can make it much, much worse, right? Because interest rates, people don't there's not a lot of talk about interest rates going up, but if inflation kicks in, then those interest rates start to get looked at and talked about. And we're in a market right now where we've got interest rates so low, they're lower than most cap rates in most areas. And that's not a normal commercial market when the interest rate's lower than the cap rate, meaning that the interest rate is better than the cap rate on the deal that you're purchasing. You borrow money less than the cap rate. I mean, it's just not a normal thing. And so what happens is if inflation kicks in and rates go up, which is a huge risk threat, then now all of a sudden the deals don't make as much sense. And what happens is when an owner can purchase something with, say, a 4.5% interest rate, they're going to have them, let's just say, I've got a chart that shows this, but because it's much easier to follow, it's visual, but it shows a $2 million building and the NOI, the net operating income on it, and it shows the cap rate, and it shows the interest rate. Okay, so if the cap rate is on the deal is 5, and now I'm just throwing out numbers here. This may not actually be the actual chart because I'm going off the top of my head, but I'm just giving you an example. If the cap rate is, say, 5 and the interest rate's 4.5% on a $2 million deal, well, let's say that you're getting a 10% return in that scenario. Okay, just an example. Now, again, don't run my numbers and say, "Oh, he's off," because I'm going off the top of my head, guys. So please don't do that. But now let's take that same exact building or property, that $2 million deal, it's at a 5 cap, and let's take the interest rate now from 4.5% to 7, let's say, okay? So the rate jumps up by a couple, 2.5 points. Well, that 10% return goes to 2, from, a 10% return to a 2% return, just because the interest rate with the same down payment, same loan, same everything. Just a difference in interest rate. And so that is a huge risk and a huge threat if that were to kick in, because what that would mean is, okay, now instead of me buying something for $2 million, I'm not going to pay $2 million for that same property because I want a 10% return. So now, because the interest rates are higher, instead of me coming in and buying that $2 million deal, I need to make an offer $1.5 million, right? So you see what that does is it starts causing investors to take second looks, not pull the trigger, and it adds on to the great reckoning that we've been talking about.
And all of a sudden, you have people having to shift down, basically change their the types of properties that they're even able to look at or consider for investment.
Oh, well, yeah, and that's going on already, right? I mean, because look, if the deal is not if multifamily is pretty good, right, depending on the state that you're in, but look at what's happening there, California, New York, the areas where you've got heavy legislation. People are getting out. They're moving those assets out. So what's that impact going to be like? I don't know. So when I say multifamily is good, it's still pretty strong, but it's not as going to be as strong in those areas, and it's not continuing to be in some of those areas because of those things. But yeah, some of the other areas where they're rent and legislation friendly, those apartments are booming, industrial booming. But you look at office, as we talked about, we know it's struggling, as well as hospitality, but retail. The thing is, if I am going to buy a deal, and this is my investors, Michael, if I'm going to buy something, I need to make sure my income is going to come out of that asset as I'm projecting. And the only way for me to do that is to deal with essential type properties in retail. So the big word is essential, meaning that if it's non-essential, the retail space is hurting. Where if it's an essential retail space, it could be doing really, really well, right? And so I see blanket statements out there, oh, commercial real estate is going to crash, especially retail. No, you don't want to say that, because what if I have a retail space or spaces and it's all essential? I'm actually doing extremely well. Or I have a corporate guarantee or a personal guarantee with somebody who's has the means to back up the guarantee. Those are great investments. And so it causes people to get even more specific about what they'll invest in. And that's where we're at right now.
I am seeing here in Las Vegas, and I'm not making this specific to Las Vegas, this question, but seeing here in Las Vegas, some projects, particularly office projects, Class A, or even mixed-use projects that are breaking ground right now. They're investor financed, so they've got financial backing. They're still going through with them. Do you think, and we're purely speculating here, but do you think that some of the thinking behind it is we're taking advantage of depreciation of the property and a write-off to sort of balance off maybe earnings that these investors are getting in other areas? Or are they just kind of hoping for the long-term play on that?
Those are apartments, you said?
They're going to be Class A office and then mixed use, office, retail, and apartments all jumbled into one.
Yeah, I mean, that I don't know the answer to that, David. I think that certainly the flex space, which is kind of what that sounds like, is the new thing. The new 2021 is going to be the flex space, and unless you're in an area, or those properties are in an area where they are, the newer stuff, the newer buildings, they're coming in with COVID type layouts, where it's I've seen things like tape that will protect your from me passing germs to you when you touch the door. There's all kinds of high tech stuff coming. And so if that's what they're doing, then that would make sense, because the problem is is the older stuff, right? The existing stuff before COVID, where we're packing them in these cubicles, and the ventilation is not very good, and everyone's all close together. And so I'm guessing here, I don't know, but I'm guessing they're just modifying or started this when COVID kicked in, and they are designing it to where it's going to be the new office. The new office space of the future is different. It's going to be completely different. And so I think we almost need to separate when we say office is dead. We probably should turn around and say, well, the old office or existing office, specifically in high density big cities, because from what I've seen in diagrams and blueprints and projections, this new stuff that's being proposed and being built is really high tech and going to be really, really very cool.
So that covers the new builds. And you did mention before repurposing, taking an existing asset and possibly changing it. There's a lot of different opinions as to which direction we're heading in. What are some of the changes that we could possibly see, aside from the new builds and some of this technology that's being implemented, but some of the changes we could potentially see with this repurposing of existing real estate?
Yeah. So a lot of people are trying to figure that out. I think there's people in garages, people in offices that are trying to design the next restaurant, right? Then the COVID compliant restaurant that everyone can come to and experience their dinner with less risk, and because it's not going to just be gone, right? We have vaccines out now, and it seems to be getting better. But what's if there's another strain? What if? Just all it takes is a cough or a sneeze, and we have an issue. So I think people are doing that. You also have people that are really trying to figure out what can I do here? What will the city allow? And what can I go to? How can I make this happen? And so you're looking at industrial, you're looking at flex space, the mixed use stuff, the residential stuff, because high in demand. I have several clients who are looking at motels, the motel stuff that's really struggling, and looking at either converting that to apartments or individual single family homes, condo type homes, right? And that's a home run. I can tell you that almost everyone that's done that or has looked into doing that is a home run if they can get it done through the city, and there's parking and all the things that are required to do that. That's the most common. It's these office spaces that they're really they're struggling. They're struggling on how to do it still, but mostly that's what we're seeing in the industry is repurposing, and really the most common thing that I've seen personally is like I just said, the motel to apartments or motel to single family homes or condos.
Michael, you've got a wealth of knowledge. If I want to learn as much as and be able to get all this background, all this knowledge, where do I sign up for NCREA courses? Where do the viewers go to if they want to have you or some of your colleagues instruct you through the world of commercial real estate?
Sure. Yeah, I appreciate that, David. We do all kinds of things now. We do free trainings. We do 1 hour, we do 2 hour trainings. We have 1 day events. We have 3 day events. We have advanced courses. We do coaching. We have all kinds of different things that we provide. I would just go to our website, www.thencrea.com, thencrea.com, and it stands for the National Commercial Real Estate Association. Go there, click on the calendar, and you can see what we're doing. The easiest thing to do is plug into one of our free 1 hour, 90-minute series that we do, and just check it out. It's all on Zoom. It's free. You just plug in, and there's different topics that we do on a regular basis, and just see if you like what we're talking about. And if you do, you can kind of take it from there.
And I took a 3-day course through my brokerage, the EXP Commercial. I thought it was amazing. I walked out of there very excited, and I applied a lot of the techniques that you taught to the course. So I appreciate it very much, and I recommend anyone watching this to go check it out.
Well, thanks. I appreciate that. And, we were talking a little bit before, as you know, and it's nice to hear you say you implemented some of the things that we've talked about, because so many people, take training or go and they'll pick up nuggets here and there, and then they just go right back to what they were doing before. They don't actually implement it. And what percent do you think actually does implement it, David? It's a very low percentage, right, that implements anything. It just is, right? And me included, because I'm busy, right? I mean to, but I don't mean any, harm with that statement, but don't mean to offend anybody with that statement. But good for you for actually implementing some of those things, and keep it up, and you're going to continue to have more success.
Thank you so much. I appreciate it. And I do want to have a follow-up conversation as the markets develop and we figure out what's happening, maybe in another 6 months' time, see where commercial real estate is at, if you'd be open to it.
Sure. Yeah. And I hope it doesn't, I don't want nothing, no one wants to see doom and gloom. Like 2008 was a very difficult time, although our business shot way up, but it was because of REOs and short sales and me being a, that kind of broker. But no one wants to see a crash, so hopefully, that doesn't happen. But certainly a shift is an opportunity. A shift means just that. It means things are changing. And whenever there's a change, it gives everyone out there an opportunity to get in front of that change and to ride that wave. And that's what I would encourage people to do right now, because if I'm right, and I believe I am, that change is right in front of us, and you have time to adjust and get on the wave and ride it.
Well, I hope that we'll heed your warning or your premonition and adapt accordingly. And I want to thank you so much for your time and your insight. This has been a great conversation.
Thank you so much, David, for having us. We really appreciate it.